What's going on, everyone? We hope you had a great day in the market, but even if you didn't, that's all right. We still have a couple trading days left for the week, and luckily, we have a lot lined up on the schedule. Not only do we have Powell set to speak again tomorrow, but we also have crucial inflation data that's set to be released. We have the market breaking new all-time highs consecutively, at least for the past 4 days, and we have some stocks like Tesla really starting to move in a crazy way. So either way, we do have a lot to talk about today, and we have some pretty good news for short-term traders as well. But looking more specific at the market today, around 59% of the S&P 500 closed down in the red. We saw some stocks like Nvidia hold up in a decent way, and even Tesla too, while a handful of other stocks definitely took a hit. But either way, Tom, let's get right into today's episode.
Yeah, and you can see that the overall market today wasn't really very explosive, but it did make a new all-time high, right? In pre-market, it made a new high, and then once we opened, there was a lot of chop, but around lunchtime, it ended up pushing up to like 557, which was a brand new all-time high there. And then actually the market came down and consolidated right around this 555.50 support, which I thought was really nice to see. That's going to be a good support to watch heading into tomorrow. But everybody was interested in what Jerome Powell was going to say today. And Mike, he ended up actually talking about holding rates higher for too long could actually be bad for economic growth. And I thought that was a very interesting statement that he made there. And whenever we talk about this, it seems like Powell might be flip-flopping a little bit, right? Before it was, oh my gosh, we don't want to cut rates too quick. We don't want to cut them too quick. Now they're saying they don't want to hold them higher for too long. So I don't know. It's kind of cool to see Powell flipping like this a little bit, and he had a lot of crazy conversations today. I know Elizabeth Warren had him a little bit heated there.
Yeah, very true. And just like you said, we are starting to see a very slow and methodical I guess you could say shift in sentiment from Powell here. And he's really just playing chess where he doesn't want to lower rates too soon and he doesn't want to hike them prematurely. So basically this just made for a slow, choppy market that also happened to make new all-time highs yet again, which is ultimately exactly what Powell wants. So he definitely did a good job for himself today. But as we look at the market, yes, it's at all-time highs, and that's great to see. But we're not really seeing the true euphoria and momentum that we saw a couple weeks ago and a couple months ago. Just like we looked at the heat map already, there weren't like any specific stocks that really stood out. Like, yes, the market closed up a little bit, but it's like you have Nvidia and Tesla in the green, while you have Microsoft, a handful of other chip and tech related stocks in the red, and you have like Apple, Google, and Meta just doing nothing. So it just makes for a lot of chop. And one thing that we've talked about a handful of times already, but is especially important to keep in mind over these next couple days, is that the first half of July tends to be one of the strongest periods of the year for the market. And we could see that we're now on July 9th, so we're getting towards the, I guess you could say, later end of the strongest period of the year. So keep in mind over the next couple trading days that historically speaking, we do see a lot of strength during this time. So be careful jumping the gun with puts, and if we do see a turn, just understand the history that is that goes into this time of the year.
Yeah, this is definitely a pretty strong time of the year, and whenever we start to look at the next few days, this is, like you said, some of the strongest movement of this first half. So definitely keep that in mind over the next few days. And the good thing is that with the price action today, the market didn't necessarily tank or anything. It actually held up on support very well, and I think that with that support holding, it's pretty good. It's a pretty good setup into tomorrow if we do continue to hold here and get some more good price action. And even those stocks that didn't do anything, like Meta and Apple, for etc., they didn't really like fall off. They might have been down a little bit, but for the most part, they were just right around break even on the day. So keep that in mind too. But Powell will actually be speaking again tomorrow. So he'll actually be testifying to the House tomorrow. Today, he spoke with multiple senators in a committee. He'll be speaking with the House tomorrow at 10 a.m. Eastern, so be ready for that event. He might say something, he might not. He didn't really move the market today much, Mike. I know that, he made some headlines and stuff, but, you can see the SPY was just chopping around there. There was definitely no clear direction or anything like that picked from the event.
And that's totally fine because it's more so how this sort of market environment is adapted to rather than anything else. And some stocks that are moving in a very strong way are stocks like Tesla. This thing has been ripping for at least a couple weeks now, and we can see it's now above that $260 level. And I'm quite surprised with not only how well it is holding up, but how well it is continuing to rise in like a momentum-filled way. Tesla is one of those big tech stocks that has really lagged behind the rest of the big tech stocks this year, but they're definitely making ground pretty quickly. So as we look at Tesla going into tomorrow, of course there are like the momentum style short-term bullish opportunities for the scalpers out there and for those who are willing to have tight stop losses, but there should also be a good movement to the downside when the tide turns. So either way, looking at Tesla, the main thing to know is that this stock is moving in a volatile and momentum-filled way. It's not as important about which bias you have, whether it's bullish or bearish. It's more so that the price action that's associated with it is price action that actually offers opportunity, unlike the chop fest we are seeing with SPY.
Yeah, SPY was pretty rough today, and, looking at where the opportunity is and where the money's flowing is definitely the way to go. And, looking at Tesla here, Mike, it's actually approaching some pretty big resistances. I know like this 264, 265 level has been pretty huge in the past, and then 270 as well. So I'll be watching those over the next couple days on Tesla very, very closely. But yeah, sticking with where the money is definitely the way to go. And another stock that did pretty good today was Nvidia. I would say the price action wasn't quite as good as Tesla's, but at the end of the day, it ended up 2.48%. But you can even see, like with Nvidia, a powerhouse here, even it was chopping today, even while it was green.
And then also, Tom, check out a stock like Citigroup, ticker symbol C. This one has earnings on Friday, and as we know, it's a bank stock, but also keep a close eye on not only Citigroup, but a handful of other banks. You could say like even JP Morgan and Wells Fargo, as we're starting to see a little bit of a pre-earnings run up here. So these are just another group of stocks to keep on your radar heading into the next couple days.
Yeah, and speaking about that earnings, Mike, the earnings calendar is pretty empty up until Thursday and Friday. There's not really too much, but on Thursday, we do have Pepsi and Delta Airlines reporting. That's pretty big. And then, of course, Friday, like you mentioned, we got those banks, JP Morgan, Wells Fargo, and Citigroup. And, like you said, some of those banks were moving very well today. That intraday move by Citigroup was amazing. I know it tapered off towards the end of the day, but for the first few hours, that is like the definition of, pushing new highs and just continuing up with that awesome momentum that traders love to look for.
You know it, but on a different note, we do have some pretty good news to talk about, Tom, and that is how basically current options prices are among the cheapest that they have been in years. So as we can see by looking at this chart here, we can see the S&P 500's 8-day at-the-money implied volatility. It sounds super complex and fancy, but basically all it represents is the relative price of options. So when this is low, it means options are cheap, and when this is high, it means options are pretty expensive. And there's definitely no surprise as to how options were the most expensive during the COVID crash back in 2020. But either way, what's pretty interesting with this is not only are we seeing options prices that are among the cheapest that they've been in years, but we're also seeing them be very cheap in a time where we have a handful of exciting things approaching. Of course, months down the line, we do have the election coming up, but in the short-term side of things, we have Powell, the market's still at all-time highs, earnings season is back in action, and we have that crucial inflation data set to release on Thursday before market open.
Yeah, that's going to be huge this week. The inflation data will be a big reading. And, Powell and them, I know that they look at the PCE very closely as well, but this inflation data will be very, very important. And, looking at some of the data here, Mike, for the core inflation rate year over year, they're looking for it to stay right around the same. And they're actually looking for the normal year over year inflation rate to drop by 0.2%. So that could end up being pretty big if it ends up dropping down to like 3.1% or even lower. That would be a good sign that inflation going down a little bit. So I don't know, it's going to be a very interesting end to the week here, but there's definitely a lot going on. And, like you said, while the options just happen to be so cheap, but then again, implied volatility does pick up usually like whenever stocks are going down more. So that does kind of make sense that it's low, but at the end of the day, it's awesome to catch these good moves, and the options are cheap, which I think people love. People don't want to be paying $500 for a weekly option, right? It's not something that the average trader likes to do, I would say.
Yeah, unless I know some people definitely get tempted into it, especially when some of these stocks like Tesla or Nvidia move in some pretty big ways, and sometimes it definitely hits. But I definitely agree with you. Most of the time, it doesn't feel all that great to be overpaying a ton for some weekly options that decay faster than I don't even know what. But either way, what's kind of related to, I guess you could say, this situation with options pricing is the VIX. So as we know, the VIX, or the volatility index, in many ways just represents the fear and volatility expectations of the overall market. This also goes hand in hand with options pricing. But the VIX right now is at one of its lowest levels basically since 1992 in terms of election years. So we could see that in a normal election year around this time, the VIX can be anywhere from, you could say, 14 to 15, all the way up to like that 25 to 30 range. Right now we are at 12.5. So this literally shows you that even the market makers are not expecting all that much craziness in the market in the short term. However, market makers have been wrong on this in the past, and when they are wrong on this, it definitely hurts them. So basically what this means in simple terms is right now, the market itself is not necessarily expecting too much of like crazy movement. But if some crazy movement does happen, the options prices are very attractive given how little premium is juiced into them. So it's like if we start to see some momentum-driven good movement, be ready for some exciting opportunities ahead. I'll leave it at that. But I definitely wanted to showcase this for today.
Yeah, it's interesting, and I love looking at the chart of the VIX. I love watching this big support down here around 12 and then 13. If this area ends up holding up, that could be huge, and I think that with all the big events and everything, like with the election and everything like that that could end up going on, I think we'll see quite a bit of volatility, and I think that the VIX will actually start to pick up a little bit here, maybe into the colder months of the year, like maybe like August, September, October, somewhere like that, but we'll have to see. You know, the election year is a tough year, right? And as we've seen multiple times, right, especially in the short term here with the seasonality, in the short term, we're all clear, right? I think that the election might start to get a little bit more heated, obviously, down the road.
All right, Tom. Let's get right into the good stuff for today, which are some setups and predictions. A stock I'm watching very closely right now is KWEB. For those of you who don't know, this is an ETF that follows Chinese-related companies, and while you could have your own opinion on them for the long term, for the short term, they're definitely moving in a momentum-filled way. KWEB has been in a pretty strong uptrend since the, I guess you could say, beginning part of the year, and it has started to pull back over like the past like month or so. It is now starting to get a little bit of that positive bullish momentum back, and it had a pretty strong day today. I really like the risk reward with this one. Right now it's at like that $28 level. I like it for a stop loss just under that $26.90 area with profit targets that can go all the way up to 30, 32, or even higher depending on how the price action develops. But either way, I really like the short-term risk reward and also the recent flows, not only with KWEB, but also other similar Chinese-related stocks.
Yeah, and these stocks have been kind of dipping over the past like month to 2 months, and it's good to see them starting to come back up here off of these supports like BABA, Queb, JD. A lot of them are starting to look pretty good here in the short term, so I'll keep these on the radar. I do like China stocks in the short term. You know I've said that I am not a huge fan in the long term, but nonetheless, the short-term opportunities can be pretty good as well. But looking at my first play, I'm actually looking at Penn Gaming once again. This is a pretty wild stock, and it's just consolidating right at this resistance resistance at $20. It actually had a pretty big dip today under 20 and then started coming right back up towards market close. So I'm going to keep watching for this to hold above 20 tomorrow and look for some more bullish price action. Today, we did not get that hold above 20 like we talked about yesterday. So if that happens tomorrow, it's a no play, right? We need to see it hold here and get some good price action back to the upside.
Alrighty. Another stock I'm continuing to watch very closely is CMG, and I know I've been hitting on this one quite a bit in the recent videos, but it is just playing out beautifully. So looking at CMG, it is continuing to fall just like we talked about in these previous videos. The bearish momentum is only strengthening. The price action has been pretty good, so I'm going to continue to look at this one in a bearish way. But like many other setups similar to this one, what's ultimately most important is the type of price action that we see with the stock. So it's like if this stock opens up tomorrow, it gaps up and it starts like running to the upside in a momentum filled way, that is not a setup that is ideal for playing to the downside. Whereas if CMG maybe consolidates a little bit, puts more pressure on recent lows, and just, again, just actively moves to the downside, that only further reinforces the already existing bearishness and just makes for a nice asymmetric risk-reward situation. So either way, CMG is on my radar to the downside.
Yeah, this has been an awesome play over the past few days. There's been a lot of people taking advantage of it too. So I'll keep watching it down. It was down 3.4%. And whenever you start to look at the daily, I mean, it's getting pretty rough, Mike. Like these red candles are getting pretty overextended. And, we drew out a pretty good downside opportunity here yesterday, and we put a nice stop loss and everything. Look at how well that ended up playing out this morning. So yeah, it was a very nice setup there. I'll definitely watch it for tomorrow. With my next play, I'm looking at Amazon, and Amazon's been consolidating quite a bit in the short term. It's sitting right around this key 200 to 201 level. I don't want to just say 200 because it has been extending and touching right around 201 and then dipping back down. And if we go to the book map, you can actually see how major this is. So 200 got hit earlier today, but you can see 201, there's 65,000 shares stacked up there. And then there was a lot around $200.50 throughout the day as well. So I'll be looking for a good continuation and breakout to the upside up above like this 201 resistance.
There we go. And just like you said, there's definitely a wall of sellers just lined up at that 201 level on Amazon. So definitely keep that level close on watch heading into tomorrow. But Tom, I think it's now about that time for today's momentum plays. And with the first one, we have Citigroup to the upside.
Yeah, how could we not, right? These banks were on fire. If Citi ends up breaking out above 66.75, right around that high of day, then watch it up again tomorrow.
All right, with the next one, we have BABA also to the upside.
Yeah, the China stocks are blasting. BABA's right around resistance at 76, so if it can break like 76.05, then watch that one for upside opportunities.
All right, and then with the last one, we have Microsoft for both directions.
MSFT, this one was actually down quite a bit today, which was kind of surprising considering the overall movement here. But I'll go ahead and watch it down under 458. That's going to be a big support. You can see that wick right around the end of day. And to the upside, I'll be looking for it to break out above 461.50, just above this 460.50 resistance.
All right, sounds good. So we have the upside level for potential move higher. We have the downside level for potential move lower. This is with Microsoft. Don't forget about the upside levels on Citigroup and Alibaba. Either way, these three stocks are on watch for potential day trades tomorrow. If and only if they break through the levels Tom listed, we are looking for strong, powerful, consistent price action. The stronger the setup is and the more consistent the price action is, the better the setup ultimately becomes. If these stocks do not break the levels listed, do not force a mediocre setup. But either way, those are the momentum plays for today. And let's get right into today's big money trade. And I'll have to start out by saying we don't have three big money trades today like yesterday. It's only one, and it's kind of a small one too. But either way, we are looking at ticker symbol SABR. The big money put around $325,000 into the $4.50 strike call options that expire on January 16th of 2026. So these ones have a ton of time to them. Looking at SABR, on a longer term chart, the stock has been slowly fading lower. In the short term, it has been showing more strength, which is good. The trader behind this is definitely looking for a longer term uptrend with this one, which is interesting. This big money trade isn't necessarily my favorite big money trade ever, but as with any volatile stock, just like SABR, when it moves, it can definitely pick up momentum and start to have some pretty parabolic price action. So either way, consider looking into this one.
Yeah, and when this stock does start to move, some of these uptrends can be pretty significant here. And I know it's already been on a bit of an uptrend. And let's say it starts to break out, and it's been on a pretty I don't want to say it's been on an uptrend, right? I'll say this: it's been on an uptrend in the short term. Whenever you zoom out, you can see the obvious long-term downtrend that it's been on for the past couple of years. And let's say that it starts to get towards the top end of that trend, then I think that we could see a pretty good move in the short term. This would end up being a pretty fire play. It has all the way out to January as well. So just keep that in mind. The only thing that is a little negative is just that strike price, just being a little bit out of the money there.
Yep, exactly. So either way, keep a close eye on this one going forward. But if you guys are new to the channel, consider obliterating that subscribe button to get our videos recommended to you more often. We post all the time, and in every single video, we cover big money trades, the most important news you have to know about, setups and predictions for the short term, as well as charts that you would have never otherwise seen. So consider joining the Stocked Up crew and obliterating that subscribe button. But Tom, overall, I'm pretty excited, not only for tomorrow, but for the rest of the week. Earnings season is back in action. We have inflation data coming out 1 hour before open on Thursday. The market's at all-time highs. Tesla's moving in a pretty big way. We had a lot of crazy big money plays, especially in yesterday's video. So it's an exciting time to be a trader.
Yeah, it definitely is, and I'm loving this upwards price action still. And the SPY, I know today was a little bit choppy, right? I know the SPY traders might have been happy, might have been sad, depending on what your niche is. If you're a breakout trader, it was probably a pretty slow day, right? And that's going to happen sometimes, but just watch that support for tomorrow. I really do like this 555.50 support. If we end up breaking under there, I'll be watching it to the downside, but for the most part, I'm going to be looking for a hold and move higher tomorrow just for a nice continuation. And you know what? The seasonality backs it up too.
There we go. And if you guys are into short-term trading, definitely check out that first link in the description in the comments down below to get in on the Stocked Up trading floor. Our SM bot hit it out of the park today as it had a 585% call out with Baidu calls today, which was insane. It also did pretty well with some Goldman Sachs calls that popped up by 266%, with some Microsoft put options as well that popped up by 164%. And what's really cool about SM Bot is it showcases its best performing, I guess you could say, setups every single minute. So they're super easy to reference and follow in the bot counter channel. Basically, if you're into short-term trading, the Stocked Up trading floor has everything you need, whether it is SM bot, surge bot, hybrid bot. You can chat with Tom and myself all day long. You can access our weekly live events. You get access to the big money plays on the same day the trade is made, but before they're talked about in the videos, which definitely is advantageous, as we've seen with the SLV big money trade from last week, as well as many other tools and resources that you never knew you needed. So either way, definitely check out that first link in the description in the comments down below. Coupon code BIGMONEY will save a ton, and we certainly don't do sales that often. But Tom, while you're in the Discord, let's also give a giant shout out to today's member of the day, and that is JD. We can see they crushed it with SM Bot today with some NOW put options. So awesome work there, and keep on rolling. But besides that, thank you all so much for watching. Again, if you're into short-term trading, check out that first link in the description and the comments down below. And besides that, let's have an amazing day in the market tomorrow.